wait for more persons to join the call before we actually continue. Let me see. Okay. So let's just wait like let's say 3 minutes, then we can officially start the session. 3 minutes will start. All right, so I guess some other persons will join us later. Yeah? Why I like waiting for more persons to join is so that we won't be going back and forth. A lot of persons might want to ask some questions, but if we start together, or most of us are here. Meanwhile, if there's anything you don't understand in the course of this lecture, just remember that it's been recorded, is on our YouTube channel, so you can go back over there, watch this video again, perhaps you'll understand it by then. And if you don't, please reach out to your account managers, or you can reach out to me, right? So remember, there's a CPA at 2:30 p.m. So basically, what we just want to do is fundamental trading. And I think from next week, where there's no CPI, we'll actually enjoy this session because CPI can come and override our analysis. This is GBP JPY. And for those who were on our market review this morning, we marked where we were going to be taking trades from. Sorry, please, if you can hear me, please, I would need your responses. A yes on the chat box. If you can hear me, just type a yes in the chat box so that I'll know we're on the same page. If you can hear me, well, I guess no one can hear me. No response. Hello. Okay, you can hear me. Acrolinus. Okay, so for those who were at the morning review this morning, we're looking at GJ, GBP, JPY, and from what we can see on our recent chart here, it's obvious that price has begun its bullish movement. Hence, we are considering price moving from our higher lows and lower higher lows to our higher highs. So we had a low right here. This extended, but unfortunately, price did not get to our point of interest here. This level, we're aiming for in between our 50 and 61.8. Price didn't get there and it pushed higher. So what we just do normally is to adjust our fib to this high point here, still maintaining our point of interest adjusted to this level, right? And one of the reasons that price did not get there. So there are times where when price is moving and you find out that it's not really conforming, you want to ask why, right? You want to query your chart to understand why you are seeing what you are seeing. And I told us this morning that I gave us a very, very quick and simple formula that if you notice things like this, for instance, if I notice that for the first time price came and didn't hit my point of interest in between 50 and 61.8, and it goes up again and still did not hit my point of interest. And what I usually do is to query why it's not doing that. So if I'm bullish in an upward trend, what I'm looking for is just before a massive upward move, like this, like this, like this, I am looking for some bullish movement. It's just like saying before you jump, if you want to jump, you want to jump high, right? The lower you go first, you need to bend down. The lower you go, the higher you can jump, right? Good. So I look for instance where there was a step down or a bearish move before a bullish move. Okay. I look for that instance, then I start to follow. So I could see that the most recent, where I have at least two bearish candles before this upward movement, right? So if I mark the high to the low of the bearish candles, if I extend it to the future, you will notice that the moment price went high, it tapped back into that zone, pulled up. Now, it can't break that my previous high. I'm not seeing significant break. Price came back there. This time around, it was able to push higher. All right. So that's what we are talking about. So in this instance now, price might not come to my point of interest because there is and let me just put it this way, there's another flow above my point of interest. Okay, so in that instance we have it. But now this now gave us a new high, this significant high, which we are targeting this morning. And with that high, I had this as my low. I had this level as my low, and you can also have it as this level. They are one and the same. So targeting my point of interest of in between my 50 and 61.8. Now I notice that it's just slightly above where price turned from. Now, this was, we were analyzing this when price was at this point here, coming all the way down, right? So what happened is this. I also mentioned that one of the reasons why price might not really enter because of this move to the downside before it pushed to the upside. This move to the downside before this push to the upside. If this move to the downside all the way, or if you, some persons might decide to mark the most recent part of the move, at least the last two bearish candles before that bullish move. Let me take it out. So this recent low before this from to the lower part, then you extend it, you notice that it's just lying slightly where my point of interest should have been. Let me change this color. Let me use this color this time around. Okay. So notice price just came back, tapped into it, and pushed to the upside. So it did not get to our point of interest, but it got back to our order flow. This is like I'm saying, how do I put it now? It's like you're constructing a building and you are going as high as 50 floors. So you need to go step by step. So for instance, after doing the first floor, I laid another one above it. It would not make sense for me to start laying the third floor from the first floor. I need to start continue from the most recent floor. Okay. I need to continue from the most recent floor. Now, this is the most recent flow of price. Hence, this point is very, very significant. All right. What was the worst that could have happened was that this same candle would have tapped into this point and still go back to the upside. Right. So I have some confluence in that particular instance. Okay. I have double confluence in that particular instance. So now this trade has already been mitigated. Now, what are we expecting? I'm expecting price to take out this. No, this was the high. Sorry, this was the high that we were targeting. Let me adjust this. This was the high we were targeting. So price has now taken out my high, but I need it to be much more significant. And let's consider our USD pairs, for instance. Let's say Euro USD. So what am I expecting on Euro USD? So like I told us, this is the same Fibonacci setup for this particular, we're using our Fibonacci to analyze price. So price has been bearish overall, has been bearish. What we are now experiencing after that bearish price is, let me put it this way so you see it, is range. Now, someone might say, oh, his price is already bullish. It's already bullish. So the last high was from this level all the way to this level. So until price takes out this high and goes higher, then we are still not yet bullish. Okay, until price does that. And price can possibly come all the way down and take out this my low and give me a lower low because we have been bearish for a while now. Okay, so price has been bouncing off this my 50, in between my 50 and 61.8 retracement levels, but it's bouncing to the upside. Right? It has been bouncing back to the upside. So we can, depending on how CPI comes out, if it comes out good, then you will see price breaking down because this is Euro USD. And if it comes out bad, you will see price obviously pushing back to the upside. So we have 5 minutes more to see what how that one will play out. So Euro USD, we cannot pick a side right now. We cannot pick a side. The CPI will determine where it goes. Meanwhile, like I said, I will have a clear direction once price breaks out of this range. For those who are familiar with Fibonacci retracement strategy, is the fact that price usually, for you to use Fibonacci levels, your price has to be in a clear trend, like your trend has to be clear. You have to establish or so price at the moment. Okay. Instead, what we are having right now is we are having support and we are having resistance of a large range. This is my support level, also marked here, and I have my resistance level slightly above. So what's happening is price can decide to pull up or break this support level and pull down, depending on how the news comes out. Okay. USD JPY, see, it's the same thing. Price just broke above. Price just broke above where we're targeting. Let's see. So this guy, that's for the US dollar. Then we see a potential pull up, continuous pull up to the upside, continuous pull up. And if it comes out bad, then we will see a return back to the downside, possibly inside of this our order flow, possibly inside of this our order flow. All right. And worst case, all the way to our 50% for retracement that price up. So this is my expectation. If it comes out good, just automatically continues pulling up. And if it comes out bad, and for the fact that the yen is already quite weak, you can see from my currency strength meter, the Japanese yen is already weak. So if the USD gains strength, it's going to be very significant. You will see a pull to the upside, right? Let me see. I'm doing the analysis this way because we have the particular fundamental CPI, a very strong one. Otherwise, it will just be a more like a strategy session for us. How we trade our currencies. Currencies are very easy to trade. Okay, are struggling to trade. To be honest with you, currencies seem to be like one of the easiest uh, instruments. Currencies are like very easy to trade. If you really know what you are looking out for, then it's very easy for you to trade currencies. Very easy for you to trade currencies. Now, if I show you some tips and tricks, let me see. If I can just give some tips and tricks of trading currencies. Oh, this is oil, by the way. We are doing only currencies. Let me see. NZD USD. I'm expecting retracement. All of these were what we did in the market review. I'm expecting a retracement to the upside. If price CPI comes out good for the US dollar, right, then we're going to see a continuous push to the downside. A continuous push. I'm sorry, NZD USD. If NZ, yes, if it comes out good, we'll see a continuous push to the upside, right? But if it comes out bad, then we'll see some significant retracement, at least to these are levels here before price continues falling. Why? We are still actively on the downtrend. So we are still actively on the downtrend, right? Just a moment, please. Result of CPI before continue. Let's the result. So sorry, my network was really out. So I had to log back to log in again. Okay, so it appears our fundamental as expected. I think let me see. Let me refresh this. Let's see. It came out the same. All right, it came out the same, which is, I think for me, it's good because it will not affect our analysis going forward. So, which is quite good. All right, thank you. So it will not affect our analysis going forward, which is quite good. If you notice, there was no significant movement in price at all. Even on our Euro USD, let me see. GBP USD also, no significant movement in price. Hence, our analysis still holds, okay? And if you notice, GBP USD is still trying to push to the upside, although it's failing to break our resistance here. Now, for those who do not know, what I'm trying to do is we are trying to analyze the currencies based on trend. So we are only looking out for something that is actively trending. So if you find an instrument or a currency pair that is actively trending, how do you buy it or how do you sell it? How do you trade it? Should you be buying or should you be selling it? So there are two things or basically three things to watch out for. Now, the first thing you watch out for is what we call your market structure. The first thing to watch out for is clearly your market structure. And what is the market structure? Market structure tells you the formation of price with regards to which direction price is actively going to. Market structure changes from time to time. Hence, it can be bullish now, and all of a sudden, it can become bearish. Okay, so how do I know if it is still bullish, and how do I know if it is still bearish? You can look at it from any time frame, your 4-hour time frame, even your daily, your 1-hour time frame, given that you are day traders, right? So I'm on my 1-hour time frame here, and this is my GBP USD. Let me clear this chart. I wouldn't want to clear this. I think it took me a while to draw all of these stuffs. Let me just leave it the way it is. Now, you notice that price was significantly going to the downside, significantly pushing lower and lower. Now, at every point in time, you need to identify your highs and your lows. So what am I saying? So when price did this, it gave me a low. Now, this was a high, this was a low. Then this is a retracement. After retracing, price started going back to the downside, right? Now, at this point here, price took out my low, broke below my low to give me what we call a lower low. Now, I'm waiting for a retracement. When price starts retracing, it tells me that I now have a low. I'm waiting to see how far that retracement will go to give me a new high. But when I was expecting price to go back up. Instead, price was just ranging. So this does not qualify as retracement. This is just a range. So price continued the movement. I was looking for a range. Price eventually started retracing at this point, right? At this point here. So it means that I now have a new low from where price started retracing from, isn't it? Good. But the retracement was not significant at all. So which potentially tells me that I have this as my high. I have this guy, this as my high, and then this as my low. This as my low right here. Okay. So whatever price is doing is in between my high and my low. These are my external structures, and inside are my internal structures. It's just like in every building, the moment you step inside the building, whatever you are seeing from outside is the external structure. The moment you enter that building, you start seeing staircase, you start seeing different doors, you start seeing perhaps offices or rooms. Those are the internal structure, all right? So we pay attention to both the external and the internal. Now, price didn't give me a massive retracement. It was just trying to range. So I'll adjust my low all the way here. Now, you will notice that finally, price broke below my low. It broke below my low at this point. And the move that broke below my low, I can take it as this high, right? So it means that my market structure has shifted again. Let me show you now. So I now have a new structure from this high. If you pay attention to what I'm showing you right now, it will really be helpful. I now have a new low, right? Good. I have a new low right here. Then I have a new high. So my trading zone is in between these levels. Now, you will see that I was bearish before, right? But now price started going up. I am not bullish yet until price takes my high. If it goes above my high, that is when I become bullish. And obviously, price went above my high at this level right here. So it broke below it to give me a new high, right? Good. So my market structure is now shifting. Now, this high is not yet significant. It's not yet significant, all right? It's not yet significant. Price came back and gave me a break. See, let me extend it. So it broke and it gave me a significant high. So this is where I will adjust my high to this new level right here. You need to pay attention and understand your market structure based on currencies. If you don't understand your market structure, you will most likely not be successful in trading because that's the foundation, right? So I have previous low. Now I have a new high. My previous high was here. So now the move that broke the high started from this level. The move that broke above my high started from here. Remember, this was my previous high, right? So it broke it at this point. So the move that broke this high started massively from here all the way. So this is now my new low, and this is my new high. Good. So inside my internal structures, I'm looking for opportunities to continue buying this market, given that I'm now bullish, isn't it? So what I do is there are two ways to doing this. I can apply my Fibonacci, which we are looking at now. So this is my Fibonacci tools. For those who don't know where to look for it, you can simply go to your insert. You're using your laptop, then come to, you can go to your, insert, then you come to Fibonacci. So there are different Fibonacci's. You can pick your Fibonacci retracement. This is what you're looking out for. So when I hit my Fibonacci retracement, if I am bullish, my move will start from down to the upside. All right. If I'm trading the market to the upside, I will start from my swing low, which is here, extend it to my swing high, capturing even the wicks. That's the shadow, right? This shadow right here. Now, based on the principle of Fibonacci as a rule of thumb, it is believed that, so take for instance, something that was being sold for 100 naira became 200 naira. That means there's an increase of 100 naira, right? Good. So here was 100, here became 200 naira. Then what we know is price is already expensive, is overbought. We need to, so what we do is we wait for price to become slightly cheaper. So price became from 200, dropped to like 120, 130. Now the principle is if price can drop by 50%, which we have here from Fibonacci. So we have at 23.6%, 30.2%, we have 50%, 61.8, 78.6, 100. 100 means full retracement. Price came back to the low where it started from. So in this case, we are interested anywhere below our 50%. Some persons can do all the way here, but I narrow it down to in between 50 and 61.8 retracement levels, right? So you can see that price just tapped in between our 50 and started to pull back to the upside. So we are still very much bullish. Whatever you want to do to this guy, you don't want to be selling GBP USD. You want to look out for buying opportunities. So I envisage price being bullish. And in fact, I also envisage that price needs to take out this high and keep pushing to the upside. All right, taking out that high and keep pushing to the upside. So, and it also aligns with my trend line. So if you notice, I have my trend line drawn. All right, from when price became bullish, the moment price changed direction and started being bullish, I have my trend line. right, drawn. And if you notice that it is also coinciding with my trend line at this point. So you notice that price is even respecting my trend line also. And my trend line is just slightly above my point of interest. Okay, so this is how you analyze currencies using the Fibonacci principles in trading them, right? They are so easy, but you need to know what you are looking out for first, all right? So let's see any other charts, see any other currency. I would like just type in any currency you want me to analyze, and let's look at it here. You'll notice that it is the same thing. It's the same thing, but please, like I said, the criteria for using Fibonacci is that particular currency you want to trade has to be trending. It shouldn't be ranging. Fibonacci does not work with ranging instruments. No, it works when price is actually trending, right? When price is actually trending, yes, either to the upside or to the downside. It doesn't matter the trend. What matters is there should be a trend, right? So USD CHF, all right? Who gave me that? Who gave me that? Oh, Mr. Felix, it's been a while. It's been a while. I'm so sorry. It looked like I just disappeared, right? I didn't disappear. It's been a while. Okay, I'm sure you clearly understand this. You're welcome. You're welcome. So I'm sure you clearly understand Fibonacci already. I think we've done Fibonacci a couple of times. So this class is just like a recap for you. But I'm sure that maybe there's one or two things I will mention that you would you will find very useful. All right, you're welcome. Okay, so let's USD CHF from start. I know. See USD USD CHF. No. Ah, okay, good. So now I just need to check. The first thing you need to do on every single chart, is to watch out. Now, remember the principle we talked about? No, work out from market structure, but I just want to confirm something quickly from our order flow. See this massive move to the downside. If we take the up before the flow and extend to the future, notice we have a hit. It works smoothly, right? So that's by the side. That's another strategy we're looking at another time. Let's just stick to our Fibonacci. We have so much time in our hands. We can look at different strategies, but one at a time. So we need to first of all understand your market structure. Market structure, your swing highs or your swing lows, as the case may be. Swing highs and swing lows, as the case may be. Remember, it does not work for a market that is ranging. It works for a trending market. So I have a low, I have a high, a low, a high, all the way here. Then I have this low right here. Let me be marking them so that you will see. Let me go back a bit. So I said I have a low at this point. I have a high at this point. Then I have another low at this point. Then price kept pushing higher. Now, someone might be wondering, oh, why don't I have the high here? Nope. This is not a retracement. This is range. This is price clearly ranging, so it doesn't count. This is my high because immediately price got here, I could see some significant push to the downside, right? So this is my high. So it means my trading range is very wide, like significantly wide right now, right? Like significantly wide. So let me establish my trading range right here. So you notice that price came and took out my high, isn't it? So for price taking out my high, I have a new high over here. Obviously, I would have a new low too. So I'll have a new low, right? Good. So price, now some persons use that support resistance, but I don't advise that because when price is trending, it can break out above or below based on your trend. So if we keep following this guy right here, so price kept pushing. Remember, we are bullish, right? We are currently bullish. But notice here that price came all the way down and it took out my low. It took out my low right here. I'm sure you've seen it. It took out my low right here. Let me go back a bit so that you see it. I was bullish before, but for the very first time, price has taken out my low. Now, what I will be expecting in future is, you say my last high before price took out my low should be protected. Like, price has no business going to break my high again. The only condition for which price goes and breaks my high, it means that we have resumed our price change is mind and we have resumed our uptrend again. So if my high price goes back to my high and breaks it and push higher, then we have resumed our uptrend. So hence, in case you see price here in future, there's going to be a potential push to the downside, right? Potential push to the downside. So that being said, now we are now looking at price not as an uptrend again, but as downtrend. It means that I now have this as a high and I have this as a what? A low. So if I apply my fib, this is my high, right? All of this move right here. This was where it took out my low. Remember, this was where my low was before, this level. This was where my low was before it got taken out, isn't it? So now I have this new high and I have this new low. So let me take this out again. So just stick with me. I'm sure you will get some good value on how to trade currencies. Very easy. You need to know what you are looking out for. If you can spot it, then you are good to go. So I apply my fib. Unlike GBP USD, where we are looking at it at an uptrend right now, right? So your Fibonacci for GBP USD in an uptrend is from swing low to swing high. But in USD CHF, where you are now potentially having a downtrend, your fib is going to be from swing high all the way to swing low. So please note that your market structure, your trend determines where you are going to be picking your Fibonacci from and to. If I'm up, bullish, I'm applying from swing low to swing high. And if I'm bearish, it's from swing high all the way to swing low. Now, we have a point of interest where we're going to be looking out for price, which is once price can get to our 50 and in between our 50 and 61.8, we potentially should have a push to the downside. All right, good. Now, in this instance, price push above went as high as our 78.6. Now, so if you have taken a sell from here, you'd have experienced some drawdown. But now, you shouldn't be negative any longer. And obviously, I'm still expecting price to continuously push to the downside. All things being equal, all right? So he said, you cannot beat the market. There's a popular saying which is, the trend is your friend. The trend is your friend, and you want to be trading in the direction of the trend. So you should understand what I mean here. I want to follow the trend, and my current trend is down, bearish, right? So after the retracement now, I expect price to keep pushing to the downside. I expect price to keep pushing to the downside. This is for USD CHF. What time frame am I using? I'm using a 1 hour time frame. 1 hour time frame. You can switch to your 15 minutes though, but always try applying your fib from your 1 hour time frame. It's not advisable applying it from your 15 minutes time frame. 1 hour is better, right? Okay. You're most welcome. You are most welcome. Okay. So since I am bearish, I also want to confirm with another strategy I have, my arsenal. So before this move to the downside, this push to the upside. Before this push to the downside, massive push to the downside, you'll notice a bullish push to the upside, right? So if I catch that and I extend it to the future, notice that I should have another sell. This is more like a supply area for me. Okay, so which price is already giving me that sell. I expect it to keep pushing all the way down smoothly like that, right? So I expect USD CHF to continuously be bearish right now. So let's take like one more, then we call it a day. One more, and we call it a day for today. Which other instrument should we analyze? I just want to show you that I let it not be like I'm just picking the instrument because I've selected them. I need you to know that this thing can be done on any instrument. NZD USD. Who gave us that? Olamide Temitope. NZD USD. Let me see if I have. Okay, I have that. NZD USD. Okay. All right. We've analyzed this already. We did this already. Where we said we are currently bearish already. We are currently bearish. We've analyzed this. I think you came late. We are currently bearish. So we are looking out for sell opportunities on this guy. Mike, this session is strictly for currencies. We have indices mastery. I think we did that yesterday. It's Tuesday. We have indices mastery. Today is for currencies, right? So I'm sorry we won't be able to take the US 100. We won't be able to take US 100, just strictly for currency pairs. Just a recap though, since we are bearish, we broke below the last low to give us a new one. So from swing high to swing low, I'm expecting price to push to this level before continuously going to the downside and possibly break it to give us yet a lower low, right? So that's for NZD USD. Since this doesn't count, which one again? One more, then we just call it a day. USD card. Coincidentally, I'm on USD card. Okay. So this is USD card, 1 hour time frame. The first thing, what do you do first? If you've been in this session for the last like 20, 30 minutes, what do you do first the moment you open your chart on any currency pair? What's the first thing you do? What's the first thing you do? I need responses, please. What's the first thing you do? That is like the very first thing. If whatever you do outside of this is most likely going to be gamble. If you don't do this first, check the trend, mark out daily range. Okay, perhaps this is another way of saying the same thing. Yeah, I think I'll go with Olamide Temitope. Check the trend, but I call it check your market structure. Your market structure trend, they have the same thing. So mark out your dealing range. I think Mike followed the way I was doing it. I was talking about your range, your high, your low. It's still the same thing though. Yeah, so you are correct. Mark out the lowest and highest point. I wouldn't want to put it that way, Olarewaju. Not the lowest and highest point, because if I look at this chart, if I want to mark the lowest and highest point, this is my lowest point, and this is my highest point here, so it wouldn't serve. Please note, you want to check your market structure or your trend, like your most recent trend. You are day traders. Now, your trend can change after a few days or possibly a few weeks, except you want to check for the overall trend, which is like using your very high time frame, like your weekly time frame, your monthly time frame. You can get your overall trend here. But if I just want to check either, let's say price has been going up for the last few days or last few weeks, you can use your 1 hour, your 4 hours to check for day trader. So 1 hour time frame, want to check for a trend. Let me pull back a bit so that we'll see from what has been happening recently. Okay. All right, we're clearly bullish here. upward, upward, uptrend, 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 uptrend. This is like, let's say low, almost a range. This is more like a range also, very wide range. Very, very wide range. Okay, so this is a high. Let's start from this level. This is a high. This is our low. Then price took out this high at this point here, giving me a new high, right? So the move started from here. That means I have this as my new low. I have this as my new low. Then where's my high going to be? So this move kept going, no retracement, just range. A little bit of retracement, very insignificant, but this is where the major retracement started from. So this is my high. So you can see that my trading range is very wide, like really wide, right? If I extend this guy to the future, notice that price took out my high at this point, suggesting that we are still bullish. Okay. The only challenge I have is it's not significant enough, but it still counts. It took out my high. So this is now my recent high. Good. And I should have a low because this move was the one that sponsored the break of that high to give me another high. So I have this as my new low right here. So this is my new trading range. So inside of this range, I'm expecting opportunities to buy from, keep pushing to the upside, right? Now, price has now most recently taken out my high. But like I said, the problem is it is not significant enough on USD card. It's not significant enough. Like I needed to take it out and, really push to the upside to give me that significant, because it potentially can return again. It's just like what we call a false break. When price falsely break a particular zone, if you are not careful, it might just return and continue, right? But we are still actively bullish. It means that if I have applied my fib from swing low to swing high right here, and my point of interest is in between my 50 and 61.8, which is here. Oh, sorry, I took my fib again. Insert shapes. Okay, so this is it. Yeah. Now, price wanted to bounce off it, but came inside, gave me some drawdown, but finally, profit, came back again, finally giving me profit. And usually your stop loss of your take profit will be the previous high, where price is coming from. So at least should have been out of this market, all right? But price is as taking out that high, but not significantly. So I'm expecting price can potentially come back inside my point of interest. What's wrong with my charts? Price can potentially come back to my point of interest right here. This level, I'm maintaining this level. As long as price has not really taken out my high to give me a new high, so I'm maintaining this particular level. So if it comes here again, we'll be looking out for another, buy, and perhaps this is the one that is going to take out this particular level right here. So, please, I would like to entertain questions at this point. Is there any question so far what we have done? Okay, let me see. There are some NZDJPY. Ecolinus, I'm sorry, this will be the last one. We don't have enough time for that again. When using the FIB, Idris Padamosi saying, when using the FIB retracement on an uptrend, we are to plot it from swing high to swing low. No, no, no. In an uptrend, you are to plot your Fibonacci levels from swing low. Just like this one, we've established we are in an uptrend, right? It's from swing low to swing high. It's not the same thing. Now, notice that from swing low to swing high, you have your 23.6, 38.2, 50, 61.8, 78.6, and 100. If I flip it the other way around, my 100 is back at my low. If I flip it the other way around and I apply my fib from swing high to swing low, now you'll notice that my 100 is to the upside, which is false. My 50, 61.8 retracement level is also false. So it's supposed to be something like this. My point of interest now shifts to somewhere like this, right? Good. So no, in that case, you are wrong. Like you are very, very wrong. So please, if you are in an uptrend, your Fibonacci retracement should be applied from swing low to swing high. You are pushing it high. But in a downtrend, it be applied from swing high, you are pushing it lower. Okay, good. Can this strategy work for US index? It can, but it's the accuracy level is less on index, but it's more on currencies. Why does price have to come down to 60 and 50? Okay, Olamide Temitope, price should, because it's assumed or it is believed that a good retracement should cover nothing less than 50%. Like if price goes up, for me to continue buying, price should come down at least 50% of that retracement for me to continue buying. So that's why I watch out for anything below 50%, from 50, 61.8, down anywhere from that range. And the same thing, if price goes down, it needs to retrace at least 50%. So that's why we are focused on those particular levels, right? So thank you so much for your time this afternoon. I hope you've really gotten good value. Let me see. You're welcome. You're welcome, Mr. Felix. So I'm going to see you again next week. Please don't forget, although you get reminders about this particular session, right? In the absence of any other question, I guess we can call it a day. You're welcome. I guess you can call it a day, right? NZD-JPY. What's about NZD-JPY? What's happening to NZD-JPY? Are you currently on a trade? Is there an active trade running on that guy? What's going on NZD-JPY? You're welcome, Mr. Felix. Okay, this is clearly down, clearly down, clearly down, right? And from our low to the high, breaking to the low again. Okay, potentially this guy might turn to an uptrend. Potentially it might start becoming bullish again. Reason because from our, let's see. Let me make sure that I'm right. All the way, all the way, all the way, all the way to this low, to the high, taking out this low at this point, this high. So if I apply my fib from high to low, and I'm targeting this particular level, you will notice the price went above. There's also something I'm going to be telling you next week about your entry points. There are certain confirmations you see that will make you, give you that confidence to enter. There are certain things you see that will give you the pointer that this can be a dangerous trade, okay? Which we obviously have at this particular point. So that being said, if you notice that price went above and took out my high at this level, isn't it? So it means that automatically price does not want to remain bearish. It potentially now wants to become bullish. Okay. So my Fibonacci now will be changed from swing low to swing high. I'm no more doing from swing low to swing high. It will now be from swing, sorry, it will now be from swing low to swing high, not swing high to swing low again. right? Like before. Okay, so my point of interest now again is this level, which price bounced off first, bounced just above 50, came inside, went lower, now price pushing up. So IMV says that price, all things being equal, to keep pushing up, right? So what you do is you use the market to make money. The market is just like every business. So allow price to do what it needs to do. Don't take the heavy body. Allow the market to just show its hand, right? For instance, you instead of carrying that load, why don't you put it on a wheelbarrow? The effort you put will be less, isn't it? On a wheelbarrow, you don't need to carry the whole load now. You just need to push, right? The same thing for a car. Just like you are going down a hill, all you need to do just put yourself there and the market will be taking you. So guys, I'm expecting this guy to be bullish and possibly even take out this and start going to the upside, given that it has broken above our previous high, right? This low needs to be protected and it has shown us that it's protecting it and we just need to keep buying this guy, right? So thank you so much. You're most welcome. I'm not the man. All right. We are fellow traders. We're just trying to make the most out of the market. All right. Thank you so much and have a wonderful rest of your day.